In today's video, we're going to talk about the Nasdaq futures and a couple of trade setups that we did have in today's session. And one of the things that I always tell my traders is take it from one decision to the next. Okay, so what happened was earlier this morning we did have a nice setup that came in at the 71.95 to 72 even area. It hit, it held, it triggered an entry where your initial risk was defined either underneath this low or underneath the low end of the zone, which would have been underneath 71.95, and it started playing out nicely. Okay, we did see a tradable rally, especially if you're day trading or scalping off of this area. It actually rallied 51.5 Nasdaq points. Okay, into the next decision. Now this is the decision where I'm going to show you an example of a trigger, because I still have people that don't understand what a trigger is, and it's basically the price action that I need to see to tell me that it's worth placing a bet against a zone. So in the case where we ended up rallying into this resistance from these prior rally swings, okay, because these were very similar in price, it came in between 72.50 to 72.55 area. Once we got up there, you wanted to see if a sell trigger fired off. Now what I like to use is a tick chart for futures during the trading day, because it allows you to get involved in the trade relatively close to where your risk definition is. Okay, the max definition of risk was above the 72.55 area. Okay, the minimum you typically risk above the high that's made prior to the sell signal. Okay, so take a look at this tick chart, because this will get you in relatively quick. This is a 144 tick chart, and here's the area where we ran into resistance. So what I use as a trigger is both the moving average crossover. I use the 834 EMA crossover, and I also like to see a pattern shift by it also taking out a prior swing low. Okay, because basically it shifts from a bullish pattern of higher highs and higher lows to potentially lower lows and lower highs. Okay, so it's kind of like a double confirmation. So the crossover and then also taking out a prior swing low. So in this case, well, let's get rid of this thing here. In this case, here's the moving average crossover right here. Now if you also waited for it to take out the prior low, that low came in at 72.45. So let's say you got short at 72.44. Where's your risk? Above this high that was made at, I believe it was, 49.75 points. So, I mean, you can have a stop at 50, and it was triggered here. And then, again, you see what the market gives you on the downside. But that was a relatively low risk entry for the type of move that you saw off of that area, because off of this you did see a decline so far of, let's see, 37.5 points. Okay, without a ridiculous amount of risk, because you fine-tuned an entry with a very short-term trigger chart. Okay, so hopefully that helps, because I know that there are a lot of you in the trading room that are not doing any of these setups yet, but that's exactly what you can do. Use a tick chart for a trigger against some of these setup zones.